Hi, and thank you for joining me on the latest episode of the Everyday Investor podcast. Today, I'm catching up with Andy Schectman. He's the co-founder and CEO of Miles Franklin, a full services precious metals broker in the United States. We're talking about the BRICS currency, the IMF, Scott Bessant, gold revaluation. Are we witnessing the beginning of a new currency system worldwide? It's a very, very in-depth conversation. I hope you enjoy it. If you have any questions, please leave them in the comment. And next time I have an expert on this topic, I'll be sure to ask them. Subscribe on the way through. Let's get started. Thank you for joining me, Andy. How are you?
It's great to be here. I'm sorry I was a little bit tardy. The power in the neighborhood didn't communicate or didn't cooperate with me, but it's really nice to be here with you. Thanks for having me.
No, that's great. I've got a few questions. There's been so many things happening in the last 48 hours, especially. Like I had a whole list of questions, which I fired through to you as well. And then I pretty much need to throw them out because half of them are kind of like redundant now, but maybe not. I mean, there's so much volatility going on in the world. I think some of these themes, some of these trends that are underway are probably going to continue to go underway in some form or fashion. So to start with, the price of gold, $3,500 about 48 hours ago, and it's up about 30% this year alone. So at your super high level, just to start with, what's your take generally on current events, geopolitical events or otherwise, that drive the price of gold right now?
Honestly, I believe if I had a gun to my head, I would tell you that gold is being reintegrated into the financial system, into the monetary system. Let's go back several years to 2017 and move forward. In 2017, we see out of nowhere the German Bundesbank, who evidently for 4 years prior had been asking the Federal Reserve to send them back their gold. And it had taken so long, they finally got aggravated, put an article in the Wall Street Journal, made a big deal about it, and said, more or less, send us back our damn gold. And we did eventually, some of it. They're asking for the rest of it now, majority of it now, and I don't blame them. Evidently, some of the bars we sent them had different serial numbers than the bars that were sent to them or that they sent to us originally. But what got interesting to me was that if you go back to 2011, from 2011 to 2017, the central banks and everyone was selling gold. It had gone from a high of 1900 and had fallen several hundreds of dollars down to I don't know, maybe $1,000 an ounce or whatnot, and gold had fallen out of favor. The S&P and the Dow were roaring, Bitcoin was roaring, and here you have the Bundesbank making a big deal about getting their gold back. That same year, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank, many of these Eastern European banks did the exact same thing. Right after the Bundesbank did, they said to not only the New York Federal Reserve, but the Bank of England, give us back our gold, please. Now, really for many years, really, you could go back to the end of World War II. The gold was either, most of the gold was held in the New York Federal Reserve because of safety, Western jurisdiction, Western rule of law, and the safety that it presented. But more recently, it was held at these two locations in England to give direct access to trading at the LBMA, the London Bullion Metals Association, the oldest precious metals hub in the world, 140 years old, and also to the COMEX in New York. So it would be held by the Bank of England, it would be held by the New York Federal Reserve safely, and then they could trade it quickly, seamlessly on the two major hubs for price setting and liquidity. And they said, give us back our gold. Now, this was supremely interesting because no one was buying gold. In fact, the central banks had been net sellers of gold. In 2018, the following year, those same banks that requested all their gold bought more gold as a group together than they did in the previous 60 years combined. Now I start getting really interested. I'm talking in seminars about this. I'm speaking at it at conferences. In 2019, those same banks doubled the amount they bought the previous year, 100% increase. And now things are really getting crazy. And then out of nowhere, maybe it's just coincidence or not, the Bank of International Settlements, the most well-informed bank on the planet, the most powerful bank on the planet, the central bank, and this is the key to so much of what is happening now, reclassified gold is the world's only other tier one reserve asset. Since the end of World War II, there's been basically one tier one reserve by central bank standards, US dollars/US treasuries. And all of a sudden, the BIS reclassifies gold from tier three, where only 50% is calculated on your balance sheet, to tier one, the only other tier one. So all of these central banks, I believe, were told by the BIS in 2017, start bringing your gold home, start buying it. Things are going to happen with gold. And we have seen over the last 4 or 5 years, 5 years now, those central banks buying more every single year, to the point where what is driving the price of gold, or has driven the price of gold really since 2019 or 2018, has been massive central bank buying. That's where everything starts. Now, you go back my entire career, I've been doing this for 35 years. I can think of maybe 1 year, maybe two, where there was any form of net imports of gold to the United States. The United States is traditionally a net exporter of gold. They did import some, I think, in 2011 and some in 2020, when everyone thought the world was coming to an end. Not a lot. But since November, since Trump won the election, the United States has become a massive importer of gold. I'm talking more gold has been imported since January of this year than has been since World War II, when everyone sent us their gold. So
Wow.
this is a big deal. Gold is the only other tier one reserve asset, and it is being massively accumulated by the traders who are the most well funded and more importantly, the most well informed. Not only massively accumulated, but repatriated from the traditional hubs of liquidity. We don't want to leave it with you. We know that that's where we get liquidity, but we'd rather have it at home. Thank you very much. So we fast forward to where we are right now. We're a net importer of gold, the only other tier one asset in the world. We hear members of the Bundesbank in Germany saying, um, gold should be revalued. On every central bank balance sheet across the Western world, gold is still valued at the old Bretton Woods price of $35 an ounce. In the United States, it's 42.22, and I'll explain that in a minute. But you have members of the Bundesbank saying we need to revalue gold to offset the liabilities in our balance sheet. Even just marking it to market will provide a tremendous amount of liquidity into our coffers that will allow us to normalize our balance sheet. You have the head of the Dutch National Bank who's been screaming this for a while. You have Senator Cynthia Loomis from Wyoming who is talking about, here in the United States, gold should be revalued in the gold revaluation account. You can't make it up, in order to provide enough liquidity to take some of it to buy Bitcoin for the strategic Bitcoin account. So you have all of these players talking about revaluing gold. You have Judy Shelton, a woman who you should have on your show. I interviewed her on my channel, and Judy was Trump's nominee to run the Federal Reserve in 2016. Due to partisan politics, she was not confirmed. And she told me, and a lot of people think she'll take over for Powell this time. I think there's a very good chance she will. But she said to me, listen, I mean, the whole premise of her book is that who the hell wants to buy US treasuries that have been weaponized and are being inflated, have default risk, have inflation risk, have all sorts of risk, where net, since 2014, there has been no new central bank buying of US treasuries predominantly. Now, there have been central banks that bought treasuries, but there's been more net selling than more net buying. And so net, it's the central banks have been net sellers of our treasuries. And why would you want to own treasuries in a country that is nearly $200 trillion in debt? Yeah, 36 on the balance sheet, but Medicare and Medicaid and Social Security, government military pensions exceed 175 trillion. We're nearly 200 trillion in debt. And a trillion is a long time ago, or a lot. And if we talk about it in terms of seconds, 31,688 years ago is a trillion seconds. And Neanderthals were stalking the plains of Europe. So you're talking numbers that are so big people can't comprehend. We're 200 trillion in debt, yet we've offshored all of our manufacturing. We don't produce anything any longer other than really financial services. So it's a situation where we're so far down the rabbit hole. Why would anyone want to give us their goods, like the Saudis, as an example? Why would they want to pull oil out of the ground with energy and effort, only to sell it to us for dollars that we can create out of thin air and then recycle? Part of the petrodollar deal was to recycle the excess into U.S. treasuries. Well, the Federal Reserve can print money to buy treasuries. Well, that doesn't seem very moral. If you can do it just like that, why would they give us their oil for dollars that we can create out of nowhere, and then treasuries, which we can buy with money we created from nowhere? Well, really, they don't. And much of the BRICS nations, much of the countries in Asia and in the Middle East are saying, there are better alternatives. So instead, if gold is now the only other tier one reserve asset, well, what we have been seeing is countries shedding treasuries and buying gold, the only other tier one. For 25 years, since 2000, gold has doubled the performance of the 10-year treasury. No counterparty risk. It can't be sanctioned, can't be confiscated like we did with the Russian assets. 5 billion of them. In essence, we defaulted on Russia. And who are we? We're a country, and again, I'm proud to be an American. I'm a patriot, right? But we invaded Iraq 21 years ago, and we're still there today. We went there under the guise of weapons of mass destruction. Sorry, we didn't find them. We destroyed your country, toppled your regime, but we're sorry. And we're sanctioning 14 of your banks for having the audacity to trade with Iran to buy liquid natural gas. We know you're boiling to death in the summer and you need to cool your homes, but you can't trade with them, so we're going to sanction your banks. And by the way, the $90 million or billion dollars, $90 billion that you made in oil revenue in 2023, well, we're going to hang on to it here at the Federal Reserve because you're not allowed to direct your own natural resource revenue. They asked us at the end of 23 into 24, can we have $1 billion, please? And we said, no, we'll give it to you next year. So what we are seeing is Iraq, as an example, kicking Western coalition forces out. They've gotten rid of all dollars in all of their banks. There are no green dollars anymore in the entire country. You can't get them. If you own a business and you trade in dollars, you'll go to jail. And so we see a situation where much of the world says, well, they're very hypocritical. Now, they can do these things, say they're doing it. They don't find it. They destroy our country. They're still here. They're sanctioning. They're occupying. And I'm not speaking to Putin or anything with the war in the Ukraine, but Putin does what he does. And we think, well, as the world reserve currency, we should have the privilege of being able to take your 5 billion in treasuries that we're holding and confiscate them and take the proceeds and give to the Ukraine in the form of weapons that enriches the military industrial complex. The world is tired of this. They're tired of being bullied. They're tired of the hegemony. They're tired of all of this stuff. So they're uniting under a common thread. So put all of this together. The BRICS nations are the ones that have been buying all the gold, producing all of the gold. The European countries in the East, the Eastern European countries, understand what's happening. They want all their gold back. They're buying gold. You have members of various central banks and senators here in the United States calling to revalue gold held in the revaluation account. You have Judy Shelton telling me Trump will issue gold-backed treasuries on July 4th, 2026. We've become a net importer of the only other tier one reserve asset on the planet.
Yeah.
You put all this together, you start to see something is taking shape. And when we talk about the tariffs, I mean, it's nonsense. There's something called Triffin's dilemma. And the White House knows this. They've written about this. They've written about this on White House letterhead, talking about the issues recently of being the world reserve currency. Triffin's dilemma is an economic theory that basically says if you are the reserve currency, you will always run trade deficits because the world needs more dollars than you could ever sell stuff in order to create you could never export enough to give the dollars to the rest of the world. You have to create more dollars and export dollars. In essence, what it's saying, there are more dollars needed than we could ever come up with just through commerce. And so you will always run a trade deficit. They understand this. If you are the world reserve currency, you will run trade deficits, period. So these tariffs are not tariffs. They're sanctions masquerading as tariffs. So we put it all together. What is happening with gold? I truly do believe that gold is being reintroduced into the monetary system. It is going to either back treasuries or maybe it even backs M1, which is about $2.5 trillion. M1 is the currency in circulation. When you go back to 33 and before, when the U.S. backed gold or currency was backed by gold, it was just M1. M2 is about 92% credit, 8% treasury notes. That credit would be like what you see when you log onto your bank account. That's That's a promise to pay Treasury notes. But until you do it, it's just credit. And so that is on M2. M1, if we were to divide the amount of gold supposedly held by the Federal Reserve for on behalf of the U.S. Treasury, you divide that number, the 8,300 metric tons, into you divide that into the money supply of M1, you get about $9,050 an ounce. Could it go that high? Maybe, maybe not. But what I'm simply saying is this, is that gold is not reacting to an event. No one in this country, in terms of the retail investor, has any clue about what's going on with gold.
Right.
What is happening with gold is that the most sophisticated money in the world realizes that we are moving towards a shift, towards sound money again, towards something that is immutable, something that cannot be confiscated, cannot be sanctioned. And I truly do believe, whether it be in the United States or with the BRICS nations, who have told us, Dilma Rousseff, the former president of Brazil and the head of the BRICS New Development Bank, said we've agreed in principle to a new settlement currency called the unit, 40% gold backed, which will be redeemable to central banks on demand. My point is simply this, is that I truly do believe that gold is truly being reintegrated into the monetary system. And while there will be volatility, enough volatility to throw off the retail investor, the biggest money in the world is going out of their way not only to accumulate it, and now to the point the U.S. is a net importer of it, where $4 billion worth of gold was delivered at the end of the February contract to COMEX by JP Morgan for a client. Who's got $4 billion? What client would that be? The Fed, the Treasury, Warren Buffett? I don't know. But, hundreds and hundreds and hundreds of metric tons, way over 60 million ounces has been delivered since the beginning of the year. That's as unusual as anything I've ever seen. So gold is something is happening with gold that is far greater than the public is being led on to believe. And then you look at what Trump said on Easter Sunday, and I'll read it verbatim. Now, remember, in terms of gold, we supposedly have 8,300 metric tons. They haven't audited Fort Knox like they were talking about. No, Fort Knox only holds about 40% of the gold. The rest is held at the Denver Mint, the New York Mint, and the New York Federal Reserve. But he said something very cryptic, and he says at 3:09 p.m. on Easter Sunday on Truth Social, he says, "The golden rule of negotiation and success: he who has the gold makes the rules." Thank you. What does that mean? I honestly believe, you put it all together, Scott Bessent, the Treasury Secretary, his largest holding was gold when he was running his hedge fund. He just came out and said that within the next 4 years during the Trump administration, he believes we will see a new Bretton Woods, a new monetary system. They understand that being the world reserve currency brings in Triffin's dilemma of constant trade deficits. It's as if we are telling these countries, like the BRICS nations, we're going to sanction you 140% if you continue to form together. It's just like he's trying to push everyone away to actually do this, to move away from the dollar, to create a moment, a reset that we wouldn't be blamed for, where they all dump dollars and find another alternative. 45 more countries have formally applied to the BRICS. I know I just threw a lot at you, but what I'm really getting at is that what is happening with gold, forget about the volatility. It's outperformed every traditional asset on the planet for the last 25 years, and more so now. Look at the 10-year Treasury. It's doubled it since 2000, but last year alone, gold's up 40%, the 10-year Treasury's up 4%. The central banks are dumping treasuries and buying gold, which is the only other tier one asset, which has no counterparty risk. And whether it be with the BRICS nations who have agreed to a gold-backed settlement currency, 40% gold-backed deliverable, or now the fact that we're net importers, which is so far outside what is normal that you have to understand that this is bigger than what it's not tariffs. And the last piece of the puzzle is a lot of this gold is coming from the Bank of England and the LBMA, which is a T+1 settlement, meaning if you stand for delivery on a contract, that's trade day, +1 settlement, you should have your metal moving to you in 3 days. They're now T+8 weeks because they're saying that they have a shortage of trucks and manpower. The LBMA, as an example, these are crude numbers, have roughly 36 million ounces of gold that is not encumbered. They have roughly 280 million ounces or 300 million ounces, but only 36 million does not belong to the Bank of England or the ETFs. That's what they call the float. That is trading against 280 million ounces of spot contracts or somewhere in that neighborhood. In other words, there's roughly 9 or 10 times more contracts that could stand for delivery than there are bars backing it. That's a very big problem. And so,
Yeah.
what has been happening for the last several years is that the BRICS nations have been exploiting the delivery mechanism that no one ever did ever before 2020. No one ever stood for delivery, less than 1%. Well, these countries are now sophisticated, motivated, coordinated, and wealthy. And instead of rolling it over or taking the cash, they say, no, we'd actually like the real metal. Thank you very much. And so these exchanges are being bled dry. And when the LBMA, which is the most supposedly the most prestigious metals market in the world, says we're now T+8 weeks because of shortage of trucks, if we believe that the Bank of England doesn't have enough trucks or manpower to move the metal that companies or countries or sovereign wealth funds or whoever they are own, like you're a jeweler making jewelry for your multinational jewelry company, sorry, we don't. You're not going to get your bars in 3 days to make your jewelry. It's 8 weeks minimum because we don't have enough trucks. There's a problem. It's a default. I guess what I'm
Yeah.
trying to get at by giving you this whole big diatribe is that what's happening with gold is far, far, far bigger in my mind than we are being led on to believe. And I, honest to God, believe that it will, as Judy says, be reintegrated into a system, whether it be the BRICS nations with a settlement currency, whether it be backing M1, or probably more likely backing treasuries, which will be redeemable in gold, um, in order to reinstill confidence in a system that has completely and totally lost it.
Wow, that's an awesome overview, and I think you could probably dissect that for quite a while and get even more detail on that. But I want to touch on bricks in a second, but in order to make sure that no one's left behind, so I know that the LBMA, the COMEX, then this phrase standing for delivery, it's really important just to kind of understand that a little bit. So, can you just take us through in plain English what the COMEX actually does and how the LBMA fits into that? And what does it mean that there's record contracts standing for delivery? Just to get that all out of the way.
So the COMEX is primarily the price setting mechanism of the world, and the global price more or less is set on COMEX. You could argue that the LBMA is the physical delivery mechanism for the world, and so basically what has happened is that you have Western banks. There's a term in economics called Gibson's paradox, which speaks to the inverse relationship between real interest rates and gold. If you maintain for 30 years a low interest rate environment throughout all of Europe and the United States to stimulate in an illusionary manner to stimulate the economy, to make asset prices high, goods cheap, your 401k, your retirement account, your home, all of your assets are inflated. The goods that you buy are cheap, supporting your system because interest rates are low. If you're suppressing interest rates, instead of letting the market dictate where interest rates are, you suppress them to create an illusion of prosperity. You need to step on gold, which is the canary in the mine shaft. Because with very low interest rates, gold should go up higher because it doesn't pay interest. So there is no opportunity cost in zero bound interest rates that we had for nearly 20 plus years, which created all of these distortions in asset prices and misallocations of resource and capital. So they would suppress it with naked contracts. And a naked contract means a bank with tons of money can just keep shorting, selling, and selling paper contracts where you have a situation where the rehypothecation, meaning you sell the same asset over and over and over and over and over again because no one ever stands for delivery. You can sell it over and over and over and over again because you have enough money to do so. And
Mm.
you just suppress the price. And anyone who tries to go long, you keep shorting it and they get margin called to death and close out their positions. That's what's happened forever. The,
Right.
the commercial banks have been suppressing naked shorting the price of gold and silver. But this is an existential threat to these banks right now because the world is caught onto it. I'll give you an example. The BRICS a year ago came out with the BRICS grain exchange, and the gentleman who was in essence behind it said, we in the BRICS nations produce and consume more wheat than they do in the West. But we don't control the price. That's all controlled on COMEX. But with the development of the BRICS grain exchange, that will change. Well, they know exactly what we're doing with the precious metals also. And instead of making a big deal about it, and I admire how methodical they are, they have been continually and slowly standing for delivery. Most of these contracts, no one ever stood for delivery. Typically, you use these contracts. I'll give you an example. If I have 5,000 ounces of gold in my warehouse, I will sell 5,000 ounces on COMEX. Why? Because if the price in my warehouse drops by $200, I just lost $1,000,000 on my 5,000 ounces. But if I sold short 5,000 ounces at the same time, what I sold short goes up by $1,000,000 when gold falls. So it allows me to be market neutral. A farmer who plants a field in April, well, he may forward sell his production to September because he doesn't want to deal with all the uncertainties of the growing season. The baker who needs wheat to make bread, he may in April say, you know what, I will guarantee to buy that production from you in September for that price. The baker's happy, he gets his wheat in September. The farmer, he's happy because he knows he's got a price that he's happy with, and it could be in his favor or against it. We'll see what happens. But that's what the COMEX was designed for, to offset risk. Well, what you end up having are very, very large banks who are trying, and I believe that they were told by, whether it be by the governments of the West, the Federal Reserve, whoever, look, we're maintaining a low interest rate environment, and this is the path we're taking. We cannot let gold go high because it will expose the reality of the situation. We want to envision a strong dollar and a strong bond market. So if we're going to keep interest rates low to make everyone feel wealthy, with their asset prices going up, making everyone take on more debt than they should, you can buy that bigger house, you can buy the nicer car because, heck, interest rates are so low, we can afford it. We can build another wing to our business, hire another 80 people because interest rates are so low. You saw what happened when rates rose a year ago. What happened to the banks? They all started to blow up. We're trapped. We've spent too much time suppressing interest rates, and that's created a major problem. Well, along the way, the countries that have pushed back against us, in particular China, Saudi Arabia, Russia, India, they've gotten wise to what we're doing. So they buy these contracts and they stand for delivery. Now, that's okay, like Bernie Madoff, unless everyone starts to say, give me my gold, give me my gold, give me my gold, give me my silver. The LBMA, in silver, the LBMA has 260 million ounces of silver, but they trade 2.9 billion ounces per day. They have 800 million, 760, of which over 500 million belong to the ETFs. The float is 260 million, roughly. But they're trading 2.9 billion ounces per day against a float of 260 million, meaning if everyone stands for delivery, which these contracts give you the right to do, you can say, I want the metal. I don't want to cash settle. So you have 2.9 billion per day, 3.5 times the annual global mine supply, trading against a stockpile of 260 million. Do you see a problem there? If everyone says, give me my metal, Houston, we got a big problem. And that is what is happening. This is what is, I think, driving the volatility. And in essence, what I believe you have happening is that the banks in the West are long in London. They're short in New York. And so what is happening is that the banks in London are short. And as the prices is, or as the demand is coming, these banks in Europe, the European banks, Standard Charter, Deutsche Bank, UBS, all of these banks are freaking out. They have massive short positions that are naked, meaning my short position is covered. I got 5,000 in physical. I short 5,000. If I had to give the 5,000, I got it. These banks don't have it, and there's not enough bars to fulfill the demand. So the Bank of England steps in and says, yeah, well, we're pushing back our delivery. We promised it was T+1. You should have your metal moving to you in 3 days. It's now 8 weeks because we don't have enough trucks. Really, that's interesting. In other words, we're this close to the whole thing blowing up, and it would blow up the banks in Europe. Now, this is where it gets a little freaky, and I'm not saying I believe this, but there is a rumor that Trump is angry at the European aristocrats who he believes, this is a rumor, I can't substantiate it, he believes are behind the color revolution in the United States, the open borders, the lawlessness, the wokeness, the election interference, all of this stuff, and he is trying to literally blow up the Bank of England and the European banks who are massively short on the LBMA by standing for delivery, draining the
Wow.
exchanges. And the
Wow.
banks in the West are long in London. And so gold is the only other tier one reserve asset. So gold is far more significant than it ever was because the BIS reclassified it that way. So the bottom line is simply this, is that there is a demand for physical possession of gold that no one has ever seen before. It started in 2017 and it's accelerating now. The problem is that whether it be in London or the United States, these banks have sold short, selling to suppress the price, to support the illusion of a strength of a bond market, to support the illusion of a strength of the Western currency system. They step on the canary by shorting gold and silver. But now you have the rest of the world saying, well, it's tier one. It's outperformed the 10-year treasury handsomely. It can't
Mm,
be sanctioned. We're going to stand for delivery. Thank you. Please send it to us.
yeah.
There's the problem. This is what is different. Now you have people in the United States saying we need to revalue gold to levels at least market to market. In the US, gold's 42.22. When we talk about gold revaluation, over my shoulder is Roosevelt. In 1933, he confiscated gold. It was $20 an ounce. He paid everyone 2067. This is a $20 gold piece. This is a $20 gold certificate. Instead of saying, in God we trust, like our currency does, back then it said payable to the bearer and demand in gold. So he confiscated gold. And
Yeah.
back then everyone owned it. It was currency. And a dozen eggs were a nickel. He paid everyone 2067. Everyone's like, that's a lot of money. Okay, turn it in. Patriotism was high. And then he immediately devalued the dollar by 35%, by 40%, putting gold at 35 bucks an ounce. That's revaluation number one. In 1971, when Nixon closed the gold window, and in essence, we went back on our promise to the world, he revalued gold in 72 from 35 to 38. That's about a 7% devaluation of the dollar and increase in gold. The next year, in 73, he devalued it from 38, or revalued gold from 38 to 42.22, again, devaluing the dollar. And that's where it stayed on the US balance sheet since. Now you have
Right.
everyone saying, let's revalue gold and market to market. That would give the Treasury general account over $800 billion free and clear if we did that. And if they really wanted to jack the price up, there are people like James Rickards who is saying his number, when you take M1, which is what it used to be backed by, M1 is just the currency in circulation. You divide that into the ounces, he's talking about as much as $24,000 an ounce. And I'm not exactly sure how he gets there. But if indeed, because my math, it's 9,000 an ounce. Maybe he's using M2. But all I can simply say to you is he's saying 24,000 an ounce is his number. As crazy as that sounds, that would give
Yeah.
the Treasury General account 6 trillion free and clear to pay off its debt, or as Judy Selton says, to back the 50-year Treasury, which she has told me flat out Trump will issue July 4th next year. Back it with
Good.
gold to give us latitude because no one wants our treasuries anymore. So the bottom line is simply this: gold is not a commodity. Gold is not just something to speculate on. The whole monetary system is sick and tired of promises, opaque promises that are backed by debt. The whole
Yeah.
concept of buying another country's debt and calling it an asset is fleeting. It's going out the window, especially since we have shown that we have chosen inflation over austerity. In fact, Powell just came out the other day and said we have to probably get rid of our dual mandate of low inflation and stable employment, meaning they're going to let inflation roar so that they can lower interest rates to try to stabilize the economy and get people back to work. We have more people working multiple jobs than ever before right now, ever before. So everything is sinking together to where gold, I believe, will find a marriage with blockchain technology and will be reintegrated into not only the BRICS nations but also into the West, um, because no one will ever drink that Kool-Aid again. And so seeing gold where it is now, continually moving higher. If you would have told me gold would be 33 and change, it was 3,500 2 nights ago. It's corrected a bit, but even still at these levels, if you would have told me at any time over the last 35 years that it would be that high and nobody would notice it in the
Yeah.
mainstream, I'd say there's just absolutely no way. But that is what's happening. The retail public is asleep. They're buying the Mag 7, they're buying Bitcoin, and
Yeah.
they're missing what is I think, a once in a generation shift in monetary policy. And I truly do believe that Trump understands this. Scott Bessent understands this. Judy
Totally.
Shelton
Yeah.
understands this. The BRICS nations understand this. And there is a race to reshore gold and to peg it to a new system to inspire credibility.
I guess when you think about it, if you thought about it in terms of like a pyramid of knowledge, at the very top, those who are most aware of this are the ones probably that have the deepest pockets, central banks, ultra high net worth individuals. They've probably understood this faster than the masses, but as this knowledge kind of seeps down through the system, eventually it'll hit retail, right? Like you would
Right. But by
imagine.
that time, the big money who is closest to the information has already positioned themselves. And that's the way the world always works. And you have to ask yourself, why would the BIS, the most powerful bank in the world, reclassify gold as the only other tier one asset? Why are all the
Yeah,
central
right.
banks buying it year over year at record amounts that no one's ever seen before? Why are they all repatriating it, taking it away from the Bank of England and the New York
Yeah.
Fed, which gave them direct access to the markets and great liquidity? Why are we seeing people like Judy say we need to repeg gold to the Treasury to inspire confidence? Why did Trump make that tweet? Why did Senator Loomis from Wyoming say we need to revalue gold along with the head of the Bundesbank and the Dutch National Bank? These are in and of themselves, these pieces of information are all relevant. Put them together and say, yeah, I mean, this has to be what they're talking about.
Hmm.
And that is, gold is not just a commodity or an investment. It's money. And I think they understand that. It inspires credibility. And I think that's where we're going. So if I had to guess, gold will be higher than anyone thinks possible when this is all done. But that's not why you buy it. You don't buy gold to get wealthy. It is wealth. It has outlived two world wars, German hyperinflation, the Great Depression, every pandemic. And here we are, almost 6,000 years after it was mentioned 400 times in the Bible. And the most well informed and well funded traders in the world are buying it like it's going out of style and taking possession of it, removing counterparty risk and liability, which the United States has proven. If we don't like what you did, we can go into Iraq and destroy the country and make the rules. But if you try to protect your own sovereignty, no matter what we feel about that war, it's not my point. But we'll tell you, you know what? We're going to take your 5 billion in treasuries and give it to the country you're in a war against. And hey, we're holier than thou. Again, I am a patriot. I love my country, but that doesn't go over well with the majority of the countries of the world. They're like, that ain't right. So we need to coalesce. And that's what they're doing. And they're finding safety in numbers. And you look at the BRICS, and I'll talk about a new development when we get to it, but you have the majority of human population, the majority of global GDP, three of the four largest nuclear arsenals on the planet, the majority of all of the commodities. China is the engine of manufacturing, the majority of all of the rare earths, and China refines 100%, and keep going on and on. These are countries that should not be taken lightly. And what has happened just recently over the last week or two really accentuates that. But what happened was that the Bank of International Settlements, which reclassify gold, they have something called the Innovation Hub, who spent 4 years developing bridge technology with the BRICS. It's a Chinese technology. It was called M-Bridge. China, Hong Kong, Thailand, and the UAE spent 4 years developing this bridge technology, which allows central bank digital currencies, which are all ISO 2020 compliant, meaning that each country has their own CBDC, but they can trade across border on this bridge, and the bridge connects them all. It speaks the same language. And Dilma Rousseff, the former president of Brazil, head of the development bank, says, yeah, we've agreed to a new settlement token, which will be traded over M-Bridge, called the unit. At the 12th hour, the head of the BIS, name is Augustin Carstens, comes out and says, and it's operational at this point. We can't be involved in any platform that will allow a country sanctioned by the West to avoid sanctions. So we are closing down M-Bridge. That's at the 12th hour after it's operational at their big meeting in Novigrad. And that's espionage, as far as I'm concerned. Did he just realize that Russia was the Iron BRICS after 4 years of development, and it pissed them off something fierce? So now it's called the bridge, not M-Bridge. And when we talk about the BRICS, I'll tell you what just happened, which I believe is a game changer.
So tell me about that then. So with like I remember when Russia invaded Ukraine, US kicked Russia out of the SWIFT system, the BRICS, Russia, Brazil, Russia, India, China, South Africa, and a few others. That started to become the main narrative around the gold. Hey, they're gonna kind of fold gold into this somehow, and there'll be a competing global reserve currency. That's kind of my like basic level understanding of that. But what's developed recently, and
Well,
how
and
does
then
it
last
tie
year
into
you
it?
had Egypt, Ethiopia, Iran, and also the United Arab Emirates. They
Okay.
all joined. Saudi Arabia is, by the way, Saudi Arabia became a full participant in Enbridge. So they were the fifth player in Enbridge before the BIS pulled out. Saudi Arabia was invited and admitted into the BRICS, and they're still kind of straddling the line right now. In essence, their allegiance to me is to the BRICS, but straddling the line because of the Trump administration. They haven't fully accepted it yet. There are 44 countries that have formally applied to the BRICS. The new meeting, the summit, is July 7th and 8th in Rio de Janeiro. 44 countries have expressed interest. 23 have formally applied. Vietnam is the 44th country to express interest, which is a big deal. It's growing. But here's what's really big. Just last week, I'm going to read this to you. The People's Bank of China has announced that its digital RMB renminbi cross-border settlement system, this is the bridge, is now fully connected to 10 ASEAN countries. These are the countries in Southeast Asia, along with 6 Middle Eastern nations. This development enables approximately 40% of global trade to bypass the traditional SWIFT system, which is predominantly used for transactions in US dollars, allowing these trades to be settled directly in digital RMB. In practical terms, China's digital currency bridge has significantly reduced cross border payment processing times from the typical 3 to 5 days associated with SWIFT to approximately 7 seconds, while achieving real time settlement with a 98% reduction in handling fees. So that's number one. You have all of these countries that have now 40% of global GDP has signed on. Now, China, what led me onto the BRICS in 2019 was the development of the Belt Road Initiative. That China is in essence trying to recreate the old Silk Road. It's Asia, it's Africa, it's countries in Europe and South America. It's 75% of global population, human population, 50% of GDP. Most of these countries are not in the BRICS, but they're aligned with them. Eurasian Economic Union. This is all the countries that end in stan, like Kazakhstan. Most of them are not in the BRICS, but they're all aligned with the BRICS. In fact, the president of Belarus said that they should get the members of the Eurasian Economic Union to join BRICS, that they're all the same countries. You have, when you put all these countries together, you have 90% of human population and the majority of GDP, the majority of all of the rare earths, the majority of the precious metals, the majority of all the commodities, the majority of all of the refining of rare earths, and three of the four largest nuclear arsenals in the world with India, China, and Russia. Now, here's what just came out the other day. Talking about this 17th BRICS summit. It's been going on for 17 years. People don't understand that. This is not a new development. 44 countries expressing interest, 23 formally applying. This is from an article that is quoting Sergei Lavrov, the Russian finance minister. Here's what he says. This is the game changer. Talking about the new BRICS payment platform for both member and non member countries. This system would be independent of SWIFT, the US dollar, the euro, and the British pound. Russian Foreign Minister Sergei Lavrov emphasized it will be open to non member nations, potentially accelerating de dollarization on a global scale. So, what we're saying here is that everyone thought this was just a handful of countries. No,
Mm.
you put it together with the Europe or the Eurasian Economic Union, the Belt Road Initiative, the Shanghai Cooperation Organization, which in and of itself is it's the largest regional financial and military organization on the planet. They're not all in BRICS, they're all aligned with BRICS. And that was the president of Belarus who said the SCO, the Shanghai Cooperation Organization, the Eurasian Economic Union should join BRICS. It's calling for a summit to do that. You put the Shanghai Cooperation Organization, which is the largest regional military organization in the world, along with the Eurasian Economic Union, along with the Belt Road Initiative, you're talking the majority of human population that now can trade outside of SWIFT with 8-second settlement, and they will trade their own local CBDCs with one another and settle the imbalances in gold, which is what? The only other tier one asset that who's been buying? All the central banks. And what they've been doing with it, they've been bringing it home. So
Makes sense.
what the world has not been prepared for is that kind of a statement like, yeah, you don't have to be part of the club to trade with us. And why would you want to trade with a currency? Pull your oil out of the ground to trade for a currency that they can print out of thin air. And why would you buy treasuries that they can print currency and buy treasuries to lower interest rates? It's immoral. You want us to give you our goods, our commodities for something you can just create like that with a keystroke? We're out. And that's why they're all joining together and using something like gold as a back, as literally the keystone, the backing of a new system which cannot be sanctioned away, which has doubled the performance of the 10-year treasury.
Yeah.
This is happening. And it is
Yeah.
what? The only other tier one reserve asset on the planet. This is why
Yeah.
you are seeing gold go higher, independent of the public who's got their head in the sand and has no idea what's happening. They just
Yeah.
believe that the Mag 7 and Bitcoin and all of these other, traditional investments, well, Bitcoin's not, but the traditional, the Mag 7, the S&P, which, by the way, for 25 years, gold has beat the S&P, even with dividends reinvested, 9.9% since 2000 versus 9.6. No one notices it. It's the tortoise, not the hare. These countries have had it with the United States. And then you get Trump come in and say, we're going to tariff you. Those aren't tariffs. They're sanctions masquerading as tariffs. And so the world is like, you know what? We'll play this game along. We'll do it quietly. After the BIS just screwed us at the 12th hour, we're not going to tell the world exactly what we're doing until it's already done. So I think there is a massive, massive rise in gold coming that most of the people have no idea
Yeah.
that this is happening, but the biggest money in the world is already positioned.
Okay. And the way that you're explaining it makes me now think how much of this is actually coordination and how much of this like global coordination and how much of this is really a breakdown of the global order, or is it really even a breakdown? Is this actually just part of evolution and Enbridge or Bridge is now and BRICS. This is now catalyzing it, and what the U.S. is doing really is on the. They're already actually on the back foot. They're just responding to this change that's happening.
Either
Whereas
that
what
or
we're
they're incentivizing it. You look at the last administration, and all I kept saying on my podcast was too stupid to be stupid. Open borders, immigration disaster, election interference, or the perception of it. Two-tier judicial system, wokeness, where meritocracy is thrown out the window. Doesn't matter how hard you work or your qualifications; it matters your lifestyle. Lawlessness in the cities, just corruption everywhere, craziness, a president who seems senile. I mean, just the whole thing was, are they trying? And then parading Nancy Pelosi to Taiwan, jeopardizing the one China policy, funding the Ukraine war, and freezing assets and giving the proceeds to the Ukraine in the form of weapons. In the last 3 weeks of the of the Biden administration, the senile fool is sending missiles that we provide Ukraine into Russia, allowing it. Are you provoking World War III? I asked Martin Armstrong that yesterday in an interview. He said, you bet your ass that's what they were trying to do. And now you look at the Trump administration, 180-degree difference. But if he didn't want this to happen, if he didn't want to create this reset, if you will, then why would he be imposing a tariff upon all of these countries when he understands the whole concept of Triffin's dilemma, that the trade imbalance is a guarantee if you are the world reserve currency. These are the countries that we sell our goods to and we pay them printed dollars. They give us their goods. They then buy our treasuries, which keep interest rates low, asset prices high, and goods cheap. Allows us to live above our well above the standard of living that we are entitled to because of the foreign creditors that we are now saying, you know what, we don't want this anymore. We're going to tariff you. And so, in other words, I thought the previous administration was trying to create a reset because when you have nearly 200 trillion in debt, and a trillion seconds ago was 31,688 years ago, there's no way to pay it off. We owe $6 trillion by next month. $6 trillion in treasuries that are coming due by next month. We owe 28 trillion by 2028, right? We take 5 trillion a year in tax revenue at the most, and he wants to lower taxes. That's 15 trillion against 28 trillion in treasuries that are coming due. We are halfway there. That doesn't take into account all the deficit spending over the next 3 years. We're broke, we're insolvent, we're screwed. So I thought that they were trying to reset the system by those sons of bitches, Xi Jinping and Putin and OPEC dumping the dollar, because everything we were doing was incentivizing these countries to dump the dollar. Weaponization and massive inflation and stupidity galore. So it would have been easier to blame them for dumping the dollar, which would do what? The dollars would hit our shore in a tsunami of inflation, which would put interest rates to the moon, which would then reset the system because stocks, bonds, real estate, the insurance companies, the banks are all inversely correlated to a spike in interest rates. And those sons of bitches did it to us. Well, now Trump wins and everyone thinks it's hope springs eternal and everything's great, but he's doing the same mistake. Instead of issuing the olive branch, he's using the stick. And now these countries are like, screw it. We'll just form our own alliance. These BRICS nations, are they trying to create a moment where all of these countries dump dollars and dump treasuries like that?
Yeah.
So it creates this reset and we can blame them. And then we come in and issue a new system, one that is based upon nationality. We're protecting our national interests. I don't think that's a word, but we're protecting our interests, and we're trying to unite a country that has been vastly fractured. We're not a united nation anymore. We're very divided: red, blue, black, white, vaccine, no vaccine. So now, in a united form, we issue a new system because they destroyed the old system and we start anew. Could that be? I don't know. But if it were me, this is not the path I would take. Mind you, there is something noble about bringing back our manufacturing. We should not be reliant for all of our medication from China. We should not be reliant on all of the manufacturing from China. But to bring that home, you're talking a Great Depression, because the cost of just labor alone, let alone building the manufacturing, reshoring it, modernizing it, and then the labor alone means cost of goods go parabolic. And it will take time. It's like the Shawshank Redemption, where Andy Dufresne had to crawl through 2 miles of crap to get to the other side. Well, that's what happens when you have 200 trillion in debt. There's no way around it without dealing with the pain. So you can default, you can inflate, or you can find a villain. And maybe that villain is China and Russia and OPEC. Maybe it is, maybe it isn't. But all I can tell you is that whatever they are doing is, I think, catalyzing a global response where countries no longer want to hold our treasuries. And maybe that's why Judy Shelton says it needs to be pegged to gold. And maybe that's why we become net importers of gold. And the system that has been in place for all of these years, this Keynesian experiment of debt and spending, is coming to an end. And I think much of the world understands that. So one way or the other, I believe, and even Scott Bessent just came out and said over the next 4 years, we will see a new Bretton Woods, a new monetary system. This is a guy whose biggest holding as a hedge fund advisor was gold. He's a self-proclaimed gold bug. So could gold be tied to a new system? Could we be entering a new system where they peg gold to at a much, much higher level? And by the way, so you understand the dynamics of it, if James Rickards is right and they put gold at $24,000 an ounce, not just market to market, but put it way up there, could it be? Sure, why not? Who would it benefit? Every central bank on the planet who's been buying it. They're all tied to the BIS, all of them. They all know what's coming. They're the ones that are buying all the gold, reshoring it, producing it, doing whatever they can quietly, using the stupidity of our Western suppression to get it. But the way that it works is that the Treasury would issue what's called gold certificates to the Federal Reserve. So we give you the gold certificate saying this is how much gold we have, and they give it to the Federal Reserve. The Federal Reserve does not have right to the gold. They have right to the dollar equivalent to the gold. They would then print, in essence, $6 trillion and give it to the Treasury General account free and clear, just like that. Now they can do with it what they want to help normalize the balance sheet, back the 50-year Treasury, back M1, whatever they decide to do to re-inspire confidence. And you listen to Elon Musk, he wants to put everything on a blockchain, not only, for voter integrity, but government spending, assets, government debt for everyone to see, to inspire transparency. So you peg gold to the system with great transparency. You've married a commodity that the central banks are buying at a much, much higher level with blockchain technology for everyone to see, to inspire authenticity and transparency. That's where I really think we're going. How we get there, what it looks like, not quite sure. But I will tell you this. I've been doing this for 35 years, and what is happening with gold is so far outside the realm of anything anyone has ever seen in this industry that it is far more than we are being led to believe. And most people don't even know a gold coin if it fell on their foot anymore, so they're not paying attention. I am, and I'm telling you, it's way different than what we are being told to expect with what gold is doing right
Sure.
now.
Okay. So for me personally, anyway, I've been in gold for about 7 years. Started out thinking about it as an investment, and then probably more recently, I guess, thinking about it as money itself, as just a form of savings, or I think in your words, it is wealth. Um, I hold the physical, but I also own some exchange traded funds, some ETFs. So I just wanted to get your perspective on ETFs like GLD. What could I expect as a holder of GLD? What could I expect over this period of time in terms of price performance, end game? Am I at risk as a holder of this paper certificate
Well, you can
versus
never
the
take
underlying?
possession of it, number one. Only the big banks that fund what's called a basket can. You know, it always pissed me off that JP Morgan got to be the custodian of SLV. Their partner in that custodianship is BlackRock. And because they paid the largest fine to the Justice Department they had ever handed out at that point a few years ago, $920 million for manipulating the metals market, yet they allowed them to be the custodian of the largest silver trust in the world, along with several others. Always bothered me. Well, just recently, think about all the reshoring of gold, the importing of gold, all of the talk of gold. Quietly, JP Morgan and BlackRock just became the primary custodian of GLD, not just SLV, in two vaults that JP Morgan controls in London and the United States. They own more gold or hold more gold than the majority of the G20 countries. So they could, on a Friday night, come in and say, you know what, these funds are closed. All the money you had in your account is now in your money market. They look the world in the face and they say, what? We didn't break any laws or infringe any civil liberties. We just did what the prospectus gives us the right to do. JP Morgan, you could argue, is a branch of the federal government. So instead of going door to door to confiscate gold the way Roosevelt did, they just have JP Morgan close those funds. And now all of that gold is delivered directly to the Treasury. And I think they're two of the worst funds ever created, to be honest with you. And you're paying a 40 basis point management fee anyway to BlackRock for doing this. And if you think about the big picture, one of the reasons silver hasn't taken off yet is that silver is used massively in military. And I gave a speech 3 years ago in Vancouver where, through my research, I said there's 500 ounces of silver in a Tomahawk cruise missile. And at the end of the speech, a guy comes up to me. I literally almost had a heart attack. He says, I work for the Department of Defense. I'm like, whoa. He's like, I helped design the Tomahawk. There's silver in it, but I don't know how much. I think you're wrong. I'll get back to you. Never hear from him again. I see him 2 years ago in Vancouver, Jay Martin's Vancouver Resource Investment Conference, one of the two that I attend every year, and a damn good one. People should check it out
Yeah,
if you're
definitely.
here in North America. He says, remember me? He has a stack of pictures. He says, don't worry, these are all declassified. He said, yeah, I developed the Tomahawk. You're right. I'll be damned. There's about 13 and a half to 14 kilograms in the cone of a Tomahawk and all of these high-tech weapons. And he showed me pictures of the Tomahawk. They were testing it to shoot vertically off of a platform in the ocean in California. He's like, yeah, they were designed to come out of a torpedo tube. So we have problems with this and that. And he said, but you are right. There's a lot of silver in these weapons and in aerospace and all of this stuff. And it used to be quoted in the supply demand numbers that the Silver Institute publishes. Surprisingly, it's not there anymore. They took it out. We have in the last 4 years about 1 billion ounce shortfall with a B between supply and demand. About a 265 million ounce per year, roughly, shortfall between mine supply, and demand. Well, the military needs it to make high tech weapons, and that's indisputable. And there's a group called silverwars.org that has done a great job talking about this recently, all the silver used in high tech weaponry and aerospace and submarines. And, anyways, you think about it, who's been running the country during the Biden administration? You think it was him? I would say it wasn't. It was the military industrial complex, companies like BlackRock. Who owns all the military companies? In particular, the largest shareholders is BlackRock. So BlackRock and JP Morgan are the custodians of these massive gold and silver trusts. They have huge positions in PHYS and PSLV in Canada with Sprott. So they make the weapons or own the companies that make the weapons that are used to blow up a country. And then who gets the and you need silver. You got to keep silver cheap so you can make the weapons. And who gets the reconstruction contracts? Oh yeah, that's BlackRock gets the reconstruction contracts. So they make the weapons, they sell them around the world to fund wars, they blow up countries, get the reconstruction contracts. Well, you got to keep silver cheap. Well, what is breaking right now is what's happening with the BRICS. China is the second largest producer of silver in the world. They'll tell you they're number one. Numbers say they're number two, but they're the second largest producer in the world. And for the last 2 years, they've been flying all around Latin America, in particular Peru. I talked to Sean Kunkun, the CEO of Dolly Varden. He says, "Yeah, Andy, they're going all over Latin America, and they go right through the miners, and they say, we will buy your doré and your concentrate. Doré are bars that the miners pull silver out of the ground. They crudely refine it, 30-40% refining, put it in a bar and send it for further refining to like the Royal Canadian Mint or to a refinery. Concentrate is a byproduct of all this. It's like a sludge. And they will pay double what the West will, buy it directly from the miners, which disintermediates the market. It's not, no one knows how much they're buying it. It's not affecting the price. Send it back to China and refine it. Why would the second largest producer in the world, when silver hasn't done anything, go to such lengths? India has imported roughly 900 million ounces in the last 5 years. That's more than the LBMA and the COMEX have altogether. Why would Russia just go out and say, we are now adding it to our strategic stockpile? It's the first country I've ever seen admit that. So you have all of these countries rushing to buy silver. You have 260 million ounces as the float in London trading against 2.9 billion ounces per day. We got a problem. And so the military industrial complex has stepped on silver to the point where 8 Western commercial banks hold the largest concentrated short position ever traded, ever on the COMEX market, ever. So you have 8 banks that are wickedly naked short silver. Why are they doing that? Why would they do that? If you look at oil, it's about this in terms of their short position. If you look at silver, it's like this. Why short this tiny market? Well, because the military industrial complex, who is a lot more powerful probably than the president, needs it to make high-tech weapons to fund war all around the world. Then they get the reconstruction contracts, and then they rinse, wash, and repeat, making immeasurable amounts of money. But this is being challenged now by countries who are finally coordinated, motivated, sophisticated, and wealthy and see the loophole. That loophole is, oh, you can stand for delivery, right? That's what we would like to do. Thank you very much. Well, the LBMA says, but it's no longer T+1, it's T+8 weeks. We don't have enough trucks. It's breaking right in front of us. These countries understand what is happening and they are standing for delivery. I think silver is probably the most undervalued asset on the planet, period, as a result of it.
Yeah.
But this whole game is a lot bigger than people are seeing. And I think it will play out that way in the end. It's now just about mathematics.
Okay. Well, I'll finish up on the mathematics in a second, but quick question around Bitcoin. Recently, again, in the last 48 hours, so much has happened. Gold's pulled back from its all-time highs, and we've seen Bitcoin kind of break free from the funk that it was in, and it seems like it's on a tear. So I'm wondering, are we going to see Bitcoin take away some of the safe haven status that gold is currently known for, or are we going to see it kind of still move in lockstep with, say, tech stocks? What's your view on
Well, I
Bitcoin
think it has
generally?
taken away a lot of it. It is moving lockstep with tech, except it's lost its purity. It's no longer a payment system like it was designed to be, another form of cash or to replace the system. It's now become very financialized in the hands of a very few, like MicroStrategies or the ETFs, and it has taken a lot away from it. But you look at the central banks; they're not buying it; they're buying gold. It's the retail investor who has, my mentor Richard Russell said, "You make 7% a year, you go into the investing Hall of Fame. You're a rock star." That's not cool enough anymore. Gold was up 40% last year. No one noticed it because it didn't rival the Mag 7, which, by the way, the hedge funds have the lowest exposure to in well over 2 years. You look at Warren Buffett, almost a half a trillion in cash. The insider selling 7-1 between buying and selling. But no one cares because you can just speculate on these assets. Gold is 6,000 years old and Bitcoin's barely a teenager. what's the right place to be. I'm not a Bitcoin basher. I'm friends and have on my show Natalie Brunell and Mark Moss, and
Okay.
these are two Bitcoin advocates. I think our communities are far better off being united rather than divisive. I think you take your profits in crypto and you put it into real money in gold, and you can continue to let your original principal increase in value. But yeah, to me, Bitcoin is not what it was designed to be. They keep changing the narrative from what it was to what it is. It's a store. It's a speculative asset, but it is taking away money from gold, and maybe that's on purpose. I was working out the other day in the club, and I'm on the elliptical, and I'm watching. I'm right in front of CNBC, and I see, CNBC has a streaming ticker, and underneath it there are three boxes that spin every 10 seconds or so: Dow, S&P, NASDAQ, Nikkei, 10-year treasury, whatever. And they spin like every 10 seconds. And gold's at all-time highs. And I'm watching it. I'm like, where is gold? And finally gold comes up. I'm like, that's weird. I'm watching it. And it comes up again. I'm like, something's not right here. So I start counting. It took 47 spins of these boxes, roughly 10 minutes, for gold to come up again at all-time highs at the time, $3,200 an ounce. And during that time, I'm also counting in those three boxes how many times I see Bitcoin. Nine. I see Bitcoin nine times out of 47, gold one out of 47. At the time, Bitcoin was at 80,000. It was 40 plus thousand off its high. Gold's at all time highs. And they don't make a big deal about it. They are nine times
Mm.
more promoting Bitcoin than they are gold. Is that on purpose? And,
Mm.
and Trump didn't say he who owns the Bitcoin makes the rules. He said he who owns
Okay.
gold, the only other tier one asset, makes the rules, which the central banks are buying and repatriating off the hook. So is it intentional? I don't know. You tell me. It's coincidental, or is it? Um,
Yeah.
to me, the biggest, most sophisticated, well funded, and well informed money in the world is accumulating gold. And the retail investor who is believes that investments should be triple digit each year are focusing on the speculative assets. To me, you could argue it's a psyop. Is it? Maybe, maybe not. Is it real? I don't know. I own a Bitcoin. I'm not convinced by it. And I think the biggest money in the world is showing you what they prefer. Why didn't Bitcoin get reclassified tier one? Gold did. So yeah,
Yeah.
it's something to speculate on, but it will take
Yeah.
energy away from gold for sure. But is that intended? I mean, why is
Interesting.
gold at all time highs and you don't hear about it anywhere on the mainstream? Maybe that's
No,
intentional.
yeah, well, I like that perspective as well, and I think I guess the warning with respect to ETFs is just another thing to kind of keep in mind as well in terms of how you get exposure to either gold, silver, or Bitcoin. I personally believe I think self custody is the ultimate because then you have the characteristics of a medium of exchange as well as store of value, right?
And you're
So
not paying management fees to the custodians either.
true.
And you're right, you have and for your listeners who haven't listened to David Rogers Webb, The Great Taking, I mean, I would
Oh yeah,
suggest you do. Go to YouTube, go to
yeah,
thegreattaking.com and read it. It's about 100 pages, or have them go to YouTube and download it and watch. He will narrate it for you about an hour.
yeah.
The Great Taking by David Rogers Webb, and you will understand very quickly the difference between physical possession and allowing custodianship of securities. And it's all stood court challenges during the great financial crisis, yet not a word by the mainstream. David Rogers Webb, The Great Taking on YouTube or thegreattaking.com. Do yourself a favor, check it out.
Read that right after the creature from Jekyll Island, and then you'll be well and truly
G. Edward
locked in.
Griffin was the first interview I did on my YouTube channel. He's an amazing guy. He's 94 years old, and that's a book
Yeah.
everyone should read because the Federal Reserve is neither federal nor a reserve. But again, we aren't taught these things in school. We all believe that the road to retirement is paved with stock certificates and mutual funds, and we are ignoring what is right in front of us because you can't get out of the way of what you never see coming. And most people, because of the media, which doesn't do anything but create divisiveness, isn't telling us what's important in my
Yeah.
mind.
Awesome. No, no, I think a lot of people share those views. Okay, so to finish up on, uh, I'm not going to hold you to this, of course. End of the year, 2025. What do you see? Price of silver per ounce, price of gold per ounce.
Give me till July of 2026, and I would say gold could be as high or higher than $6,000 an ounce, probably higher. And if you realize that silver is coming out of the ground at a 7-to-1 ratio of gold, yet it's priced at 101 because of the suppression by the COMEX and the LBMA, it had been for 5,000 years 16 to 1 as the geologic and price ratio for 5,000 years. And now it's coming out of the ground at 7 to 1 because silver is found in a form called epithermal, like your skin is epidermis. It's real near the surface. Big deposits were found forever ago. That's why we keep having these deficits between mine supply and demand. If you the God's ratio right now is 7 to 1. Man's ratio is 100 to 1 because of the manipulation, which ends badly always. All manipulations end badly. But for roughly 150 years since the Industrial Revolution, because of gold's role largely as money and silver in more of an industrial capacity, the average ratio since the Industrial Revolution has been about 42 to 1, price wise, even though it was 16 to 1 geologically and now 7 to 1, it's disappearing in nature. But if you took 6,000, which would be my guess by July of 2026, if not much higher, and I have all sorts of metrics that I won't bore you with to how I get to that number, and you divide it by 42, it puts it at 142 bucks an ounce, and that would be very logical. Even today at 3,300 ish dollars, call it 3,300 divided by 42, you get 78.60. You take 3,300 right now and divide by 7, the geologic ratio, and you get 471. Take 6,000 and divide it by 7, and you get 857, which would be logical. It is the ratio between the two it's coming out of the ground at. But take 6,000 and divide it by 42, and again, 142. That is not a uneducated appraisal. It's reality. So where does it go? Higher than anyone thinks possible. If I had to take a guess, Goldman Sachs says 4,500 by the end of the year is what it could get to. 37 is their base. So let's even say 4,500 at what Goldman Sachs says, and they've been low on every projection they've made the last few years. 4,500 divided by 42 would put silver at 107 bucks. You put silver at 100 and gold at 4,500.
Yeah.
To me, that's plausible. And, just remove the fact that I own a precious metals company, and that's Goldman Sachs saying it, and that's 150-year historical averages. And then you take the real ratio, the mining ratio, God's ratio, you're way, way higher than that. So higher than people think possible. But again, that's not why you buy it. You buy it because the most sophisticated and well-informed money are accumulating an asset that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, and anything else the world's ever thrown at it. And like I said at the onset, after being mentioned 400 times in the Bible, the more things change, the more they stay the same. They're continuing to buy and show that gold is more significant than people are giving it credit for. The central banks have always known this. The system is breaking, and that's why gold is rising to the surface, because it is the only alternative, I believe, to stand behind a new system, whatever that new system is.
That's awesome. Well, Andy Schectman, CEO, co-founder of Miles Franklin. For those that didn't catch the intro, where can people follow you? Where can they listen to you more? Because I think a lot of people do probably want to listen to you more. Where's the best place for people to go?
I'm all over YouTube. I've done 5,000 interviews in the last 5 years. We do have a YouTube channel that I started in June. That's up to about 40,000 subscribers. It's Miles Franklin channel, and little by little is my podcast, and a lot of new things happening, like I mentioned to you off air, that are happening with my YouTube channel, which hopefully will only get bigger and bigger. And for those in North America that are interested in precious metals, we do have a website, milesfranklin.com, a new one coming out in 2 weeks. But for those in North America that want our price list, send an email at info@milesfranklin.com, info@milesfranklin.com. That price list, it'll be better, as good or better than every company in North America. No obligation. We won't contact you unless you ask to be contacted. That's info@milesfranklin, and certainly appreciate the opportunity.
Cool. No, thank you. Thank you very much, Andy. And we'll hopefully catch you again soon.
I'd love to. Absolutely. I've enjoyed it. I hope you stay well, and look forward to picking up where we left off, hopefully real soon.
Sounds good. Thank you.